Hey, what's up guys? This is Mario from Trader Today, and in today's video I'm gonna talk about what we should expect for tomorrow's jobs report. So tomorrow the government will be releasing job employment situation or the jobs report with numbers, and I want to kind of cover that and how it actually plays into this chart and the price action for tomorrow that we're gonna see. So let's go. Let's check out the chart. Now tomorrow the jobs report will be released at 5:30 Pacific, which happens to be 7:30 Central, and I believe it's around 8:30 Eastern time. So what are they looking for? So the numbers are right here. Here, employment situation, Bloomberg calendar. This is where I found it. Bloomberg economic calendar. So again, I'll be released on April 6, 2018, which is Friday. Again, the first Friday of each month. So the consensus is 175 non-farm payroll jobs, and then there's a range between 112 and 225, and pretty much if the non-farm payroll is above this number, anywhere from 225 or higher, or 112,000 or lower, then we might see some insane volatility in the market. Also, the employment rate, as long as it stays around 4%, 3.9 through 4.1%, then again, we're not going to see anything crazy. But again, that all depends on the non-farm payroll number, month-to-month change. The other number that's very, very important is average hourly earnings change. And again, this is how Wall Street looks at inflation increases, because if this number is too big, again, they're looking at 0.1% to 0.3% increase. If it's higher than this, then again, Wall Street may be scared of inflation getting out of control, and that could in terms mean that the Federal Reserve may have to increase interest rates higher than what they were expected to do. So again, as just a reminder, the Federal Reserve will be increasing interest rates 2 more times this year, as what they said last FOMC meeting. And again, if that changes to 3 or 4 times this year, then again, that could definitely affect the stock market in negative ways. So year-to-year change, average hourly earnings, that's also very, very important. But of course, a lot of it has to do with the month-to-month change. So right now, as long as it sticks between 2.7 to 2.8, then we're going to be good. So we'll see what happens tomorrow, guys. Again, the stock market, the S&P 500, just to kind of give you guys a quick view of the chart, and it was trending pretty nicely. If you guys could see the 1-year chart, give me 1 second. And again, last couple months, it started to sell off. Which was very, very unfortunate, and there was a lot of consolidation around this area, a lot of volatility, but there was a bounce. There was a nice bounce. This is what's called an engulfing candle, bullish engulfing candle, which is really, really good. But I did notice something that I didn't like. The E futures, S&P mini futures are pulling back. I'm not sure why, but there's really not a lot of volume in that pullback, so that's okay, I guess. Again, once the number comes out tomorrow at 5:30 Pacific time, the jobs report number, then we're going to see the market make a move. Good thing is that so far the market has been holding the 200-day moving average, which is really, really important. And just to show you guys really quickly, again, the 200-day moving average is a very, very, very important moving average that a lot of investors and traders around the world are looking at, and it did test it at 1, 2, 3, 4, 5, 6, and it was able to hold and bounce. So that's good. That is really, really good. And the only thing we're hoping now is the jobs report is something that the Wall Street likes, the market likes, and we see a bounce finally to get out of this rut, because we've been literally the last a month, literally all March, since the start of March through the beginning of April, is literally just been a sell-off and then some consolidation, just back and forth action, and really no direction right now. So hopefully after the jobs report we have a direction of the upside, because that will really, really help out the market get out of this short-term run. So again, really quickly, I want to show you guys the VIX. The VIX is looking, it's going down, which is really, really good. It is downtrending, and we actually got a inverse hammer yesterday, which is really, really good. So that kind of shows that people are losing their fear in the market, and they're starting to the market is starting to reduce its volatility, which is really, really good. So we're hoping that tomorrow after the jobs report, the VIX starts trending down to hopefully 15, if not lower, and the market to start trending upwards with high volume. The other thing I don't like now is the volume. Again, a lot of this consolidation has been low volume. The good thing, it held the 200 moving average in this 254 level, but it's really all about tomorrow. Tomorrow is really going to make or break this level. It's either going to bounce and continue to trend upwards, which is what I want, which the market wants, or is it going to break this 254, 55 level and start making lower lows, which I really think will break this 252.92. And at that level, at that point, I could definitely see a bear market forming because, I mean, the indicators are there. But if it does hold and the jobs report does look good and healthy and the market likes it, we could definitely see a bounce to new highs eventually. All right, guys, so that's pretty much it. I just wanted to show you guys what the importance of the jobs report tomorrow. So if you guys get a chance, pay attention to that number. If you have any questions, feel free to reach out to me. Again, you guys are welcome to join my free Facebook group, Investing in Training for Entrepreneurs, and also welcome to follow me on Instagram. All right, guys, see you guys soon. Bye-bye.